Hi, welcome to this video day, which is on the 12th of February. We are on Sunday. In today's video, going to be looking at three FX pairs. They're going to be Euro USD and also the dollar against two Euro correlated currencies as well, which are going to be the PLN, Polish Zloty, and CZK, Czech Krona. We'll go to the charts in just a moment. Now, one of our favorite ways of trading is to look for bullish or bearish extremes, where traders have built up too big a long position or too big a short position, then you get a reaction the other way and those traders are taken out on stop. Now, in terms of the euro, speculators are heavily long. We have seen some downside, but we think there could be far more downside to come. Same applies in terms of the CZK and the PLN. Now we're going to go and take a look at the trade setups, but just before we do so, if you want to learn our trading strategy, learn all our trading techniques, and also check out our daily technical sentiment analysis of 14 FX pairs, just go to the link beneath this video and you can get live access to our member center. You can also follow us on our Facebook page and join our Facebook group of traders if you wish. Right, let's take a look at the trade setups. What we'll do first will be Euro USD. All right, we're on the chart of Euro USD. I want to go through these points I've written up on the left and with supporting charts in just a moment. Just want to make the point in terms of speculators. We'll look at speculative positioning as well. They get really heavily long the euro as we come up and through 110. Too many speculators are long and you see them start to get taken out on stops. You've seen some downside, but there's plenty of speculators still long the euro, which could point to significant downside. I just want to go to speculative positioning. These charts are from our favorite sentiment indicator, the COT Net Traders Positions. And I posted these on our website in the Facebook group just before we topped out at 110. You can see the euro here, the blue line going up, but speculators really building up long positions, big long position. Now, in terms of this chart, it isolates out what are called asset managers. Major group of fund managers, their size is really big. It's the biggest since 2019. Okay, now these charts are from a couple of weeks ago, but basically, speculative positioning has not changed that much since. Okay, now in terms of this one here, this is from Bank of America, showing CTAs, basically manage money again, building up a big long position. And they say they have a sell trigger at 106.65. Things could get ugly quickly should the CTA crowd decide to dump euros, which we think that they will. Okay. Now, in terms of the next chart, sorry, go back to my chart, Euro USD. Why are speculators so heavily bullish the euro? Well, interest rate differentials come into play. Market thinks they're going to narrow. So what you're going to get is a hawkish ECB who will raise rates faster than the Fed. As they see, a hawkish ECB, but a dovish Fed, just slower rate rises and rate cuts coming from the Fed, despite the fact the Fed have not indicated this. I'll just show some charts in relation to these points in a minute after I've gone through them. The yield advantage is with the USD, and will remain so even if the ECB are as hawkish as the market thinks in the price. Eurozone will avoid recession due to falling energy prices, and market is looking for good growth in the zone. That's in the price, and they're going to be disappointed in our view. China to return to strong growth, which is a major export market for the zone. I think that story now, again, in the price, and we do not think China will return to strong economic growth. Okay, if it does, it's in the price. General risk on in the market has supported the euro. We think that's going to come to an end. I just want to throw some charts in relation to these points. All right, here is current pricing in terms of rates between Eurozone and the US. US holds the advantage. Like I said, even if the ECB can be as hawkish as the market expects, which I doubt, it's in the price. The US dollar holds the yield advantage. Now, optimism about the economy. This is the City Economic Surprise Index, Europe v US, i.e. how much data surprises above forecast. And this is a note from the TME. Everybody is all in on the European long story, but previous reversals in this spread has led to the dollar making a strong comeback. So basically, Eurozone data missing forecasts, USD doing better in terms of coming in above forecasts. This gap should narrow. Okay, now in terms of here, this chart makes the point the euro has bounced more than growth forecasts warrant. This is against consensus forecasts of GDP. Okay, now the EU, you can see the market looking for a little bit of a move to the upside against the US, but Euro USD, the gap is too wide against here. That should close. In terms of the China story, you can see Chinese equities bought in a big way on the recovery story. Now they're rolling over, so that's probably in the price. This gap should close. Finally, we've seen CTAs buy, sorry, this chart isn't very clear, European equities far more aggressively than US equities, again on the recovery story. That's helped to firm the euro. This will now top out, in our view, and pressure the euro lower. No more charts there, sorry, I thought I had another one to look at. So yeah, there's some background. Right, let's have a look at some technical levels. Now we've had the initial breakdown. Where are the important levels of support and resistance? I think in terms of resistance, this now is a big level, just around the 108 level. You can see we went up there, found support, pushed off, big red slaps into support, break, back up on the blue, red. Okay, now in terms of this candle, I think it's significant. We poked up to resistance. Okay, we finished blue, but couldn't get through. Now we've got a red, so I'll take those two bodies as well. So you can sell back to these resistance levels, just get some weakness. Okay, I think the stop should be 108.40. If we don't rally and we open lower, okay, below 106.70, just go short. Where could we go to? The speculative position, you know, from our reading, historically we should get down to 104 and also possibly run on to 102. Okay, so yeah, that's the way we would view Euro USD. We think the top is possibly in and we should run on to those levels with rallies failing. If we were to close above 108.40, that would negate the bearish view, but that's the way we see Euro USD. Now let's have a look at the two proxies, which in our view also offer good risk to reward trades. So I'm going to do USD CZK first. Right, we're on USD CZK. Last two charts, I'm just going to use charts so I remember, so you get the general gist. If the euro goes down, euro correlated currencies will go down as well. I think in terms of CZK and PLN, they're both Eastern European currencies. They're going to be heavily impacted by what's going on in Ukraine. We're seeing a big Russian offensive start. That's going to mean more refugees coming into Eastern Europe, away on the Czech Republic and Poland, obviously their currencies. In terms of this one, you get the initial turn here, up above the 20-day moving average, which had only been taken out briefly here. It's the first time since November. Okay, sideways action, buy an upside breakout, stop behind the 22 level. You can see my levels at the top of the page. Look for follow through to the upside. I think this looks really good risk to reward trade on a breakout. USD PLN, again, we've seen a nice move to the upside. You had a little bit of sideways action. We've broken out. You could key off these support levels on strength or just come in, look for a move to 460, then 470. I think, USD going higher on both CZK and PLN. You might prefer the CZK because it's like a tight range breakout technically, but both pairs look good in our view. So they're the three pairs. Hope you found the video useful. Thank you for watching. Take care. Have a good day.